How we doing, Meatheads? You guys looking to make $100 a month? I can show you how to do that with as little as $500 starting out. So what we're going to do today, I'll give you guys an example how to do it. We're going to be using the Robinhood platform. I know a lot of you guys out there are using it, so I want to go step by step and kind of show you how to do that. So let's get into it. So first we want to do is get into our Robinhood app. A good starting point just to find stocks that we'd want to potentially invest in. If we click on the 100 most popular, click on that. And what we want to do is we want to pick the popular stocks because these are going to be the stocks that have a high volume of trading. So higher volume, more people trading, you're going to have better options and premiums with these options doing it this direction. So since, we're starting off here, we're saying $500 is kind of what we're looking to, invest in or right around that. I want to set our stock pricing between 0 and say like $10 because each time we buy an option, it's going to be 100 shares. So if, we were going to buy a stock that was trading at say $10, you would need $1,000 basically upfront to do the option we're going to do, which we're going to do sell puts. So if we do that, we can sort through this. I'm just going to sort it by price here. So we can go scroll through here. A couple ones that I've been trading, you can see that are checked off in here. The example we're going to do today is SoFi. So if I click on SoFi, go into there, so we can see right now this is actually trading at $5.13. So if we were to open up a contract, we'd be buying 100 shares of this. So if right now we're going to buy 100 shares of this, you'd be at $513. So if we want to stay around this $500 range, so this is the stock we're going to go with today. One thing to be mindful of when you are looking for stocks is to kind of look at how it's been trading, through the course of the week, months, and to see the volatility of it. How much it's jumping. What is it jumping from? Is it going from $7 to $4? Is it going from $6 to $5? And depending on how, what that range is really going to depend on what you'd want to set your, sell put option. The goal of this is we basically want to put our sell put, collect a premium, and then let it expire past the expiration date. So we just basically collect the premiums and we keep doing this, every week or every month, and we can get close to that, $100 a month from just passive income. So looking at this, the stock has actually been traded fairly consistent. For the course of a month, it was say $5.67, $5.74 with a max of like $6. So, if you're going to do a sell put, say like $5.50 or, even $5, that's quote unquote pretty safe in the event that, it's not really bouncing a lot. So if we click into this now, I guess looking at this, you can see there is in the past week here, there was a pretty drastic spike, and this is actually due to SoFi having their call earnings last week. And I think the market's actually reacting to this a little unfairly, but regardless, they actually had decent earnings, and the I guess potential risks that investors saw in this was that they have a lot of outstanding loans sitting out there, and with us potentially going to recession, that SoFi might not be able to collect or take any money from those loans to get that share off their plate. So that's part of the reason why the stock fell. But regardless, it took that dip. Now it did kind of come back up into the $5 target range. So I don't foresee this, dropping too low within the next week, unless there's some drastic news changing. But regardless, so what we want to do, if we go click on trades, brings up your options trading screen. And so what we want to do is we want to sell puts. And the theory of this is basically, we are assuming then that this stock is, going to be bullish in the fact that it's not going to go below our strike price here. So if we look on here, if we set a strike price $5 or $4.50, you're looking at either $3 or $11 for putting in this trade. The other thing you want to be mindful of as well is that, if you do go in this options trade and, if we're looking right now for our expiration date, so if we go for next week, we basically want to make sure that the stock is at $5.50 by the end of the day, Friday. Otherwise, you have the potential of getting assigned these shares, in which case, it would then go in your portfolio. You would have that. So before you invest in any stocks, look at the company and, you would be willing to know that, hey, if contracts do expire, you're going to have to hold on to these stocks. So is this a company that you would want to have in your portfolio for investing? So it's something you want to be mindful of. So again, I think SoFi does have some potential. I think, through the course of the year, I do think SoFi will probably drop below this $5 mark before it does start heading back up. But regardless, we're basically just using this for selling put options. If I were to get this at, say, a $5 price at the end of the week, I would not be upset about that. Again, I think it's decently priced right now for the potential of the company. So what we want to do then, we go in here and click on this, $11. So I feel fairly comfortable that, this stock will not go below this $5 strike price by the end of the week. If I click on this, you can see expiration is going to be next Friday. We're selling a put. It's basically a times up here because you're buying 100 shares. So you'd be 11 cents per share times 100. So you're getting basically $11 would be your premium here. And then you're buying the stock at a $5 strike price. So again, you're buying 100 shares of this. That's one contract. So you would be $500 is what you're looking at investing. So now, if we were to get assigned on this, you would have to get a stock price of about $4.88 to break even if you had to sell out of this at some point. So if we click continue here, I'll actually do this as a live trade. It won't go through because it's not a trading day, but just to kind of give you guys an idea, and you can see this to closure here. So again, we're doing one contract, 100 shares. Doing 11 cents is kind of what the recommended is. You can adjust this. You can go as high as you want and go as low as you want. That's going to affect the premium in which you're basically getting a credit to your account. This is instantaneous, so you'll get this and you can spend it on however you want. You can reinvest it in your stock, keep it in your portfolio, but either way, it's basically you're getting a check for $11 essentially. So to do with what you please. So again, $11, we can review this order. And again, so we are getting $11 is going to be our credit. That's what we get in our pocket. No matter what this stock does, whether we get assigned shares or it expires, we get this $11 no matter what. And then collateral, so it's a covered sell put. So we have to have that $500 we talked about before to cover this. And right now you can see your buying power. So right now I have basically $700 available to purchase this. If I hit submit, it will populate, done. Okay, perfect. Now it's basically out here pending. So when the market would open next week, assuming that, this doesn't jump or something crazy doesn't happen, this will go out there, it'll get executed, and then you will have this sell put option. The other thing I would recommend doing as well is tracking this. So, today, say it's the 7th, you can put in here SoFi. We did a sell put. We bought one contract, so it'll be 100 shares. Our strike price is at $5, and we got $11 credit. Our expiration date is next Friday, so the 12th, and now we can wait and see. So you guys, you can see the past month here, just doing these call options just from April, I've made $418 of just basically passive income by either doing these sell put or sell call options, which that can be a video for another time. And it's a great way to make some extra money investing in companies that you would potentially also want in your portfolio. So it's kind of a win-win. You're getting paid to buy stocks at a lower price or a price that you feel comfortable. And it's a win-win. So if we were to get assigned these, so say we get assigned these 100 shares, we could then do sell call options in which we take those 100 shares and invest at a higher price that we would want. And again, it's the same concept. We get that premium. So I can go in more depth in that in another video. If that's what you guys like to see. I want to kind of keep this short and sweet. But again, so if you were to do this weekly, 4 weeks in a month, you're looking at potentially $88. Now this, or excuse me, $44. Um, if you had $1,000 in here, if you want to do two contracts, again, you can get these premiums up relatively quick here. Now again, depending how the stock is, the premium that you're going to get paid for these stocks is going to be different, so it's not going to be that all the time. But again, guys, it's something to get you started, and you guys can see that and do with what you want. If you guys didn't check out my other video, there is a hot stock out there right now, TIO. I would recommend looking at that video before next week. And leave a comment, like, subscribe. Again, I'm not a financial advisor, so don't take this advice as suggestion to buy SoFi or any other stocks. Do your own research. But again, this is a great way to make some extra passive income. So hope you guys liked it and enjoy the rest of your day.